Tired of feeling priced out of the housing market? What if I told you the answer isn't a tiny house in your backyard, but a tiny town? In 2026, the suburban dream is crumbling, and something truly revolutionary is emerging. We're about to expose the hidden communities where affordable living isn't just a fantasy, it's the new reality. With housing costs that will shock you. At some point, rent stopped being a number and just became a test. How much are you willing to put up with? How much of your paycheck will you sacrifice just to exist in a place that feels less like a home and more like a glorified shoebox? For years we've been told, that's just the way it is, the price of opportunity. The reality of modern life? We've all seen the headlines, the horror stories of insane rent hikes, bidding wars for dingy apartments, and the dream of affordable living turning into a joke. You're not crazy. The system feels broken because for a lot of people, it is. It's been a non-stop pressure cooker, and for the last 3 years, it felt like it would never end. Landlords held all the cards, jacking up prices like they were selling the last bottle of water in a desert, and we paid. We panicked. We stretched our finances until they were ready to snap. But what if I told you that while the rest of the country is in housing chaos, a quiet revolution is happening in America's forgotten towns? What if I told you that in 2026, the game is changing, that developers overbuilt, investors got greedy, and renters finally hit their limit? You're not going to believe this, but the rent collapse of 2026 isn't a myth. It's real, and you can be a part of it. We're talking about places where rent hasn't just gone down, it has completely fallen off a cliff. This is more than just finding a cheaper apartment. This is a market reckoning. Today, we're taking you to the tiny towns and overlooked cities that are rewriting the rules of affordable living. Places the investor rush thankfully forgot, and where a better quality of life is now a real option. So, stick around, because the American dream isn't dead. It just moved to a new zip code. The Rivertown Renaissance, where history meets rock-bottom rents. First up, we're going to a part of America that has been written off for decades. The river towns of the Midwest. These are the communities everyone stopped talking about. Their economies didn't just slow down, they went over a cliff when the big factories of the 20th century shut down for good. But here's the crazy part. In 2026, nobody's laughing at them anymore. While major cities are getting crushed by an affordability crisis, the rent in these riverfront time capsules hasn't just dropped, it's absolutely cratered. Our first stop is a name that basically became a symbol for industrial decline, East Liverpool, Ohio, right on the Ohio River. This was once the pottery capital of the world. When those factories closed, the population shrank, and housing demand didn't just drop, it vanished. What happened next is why East Liverpool is such a shock in 2026. We're talking about homes that once rented for hundreds of dollars, now going for as low as $200 or $400 a month in some spots. Modest apartments and old brick row houses are just sitting there, waiting for someone to see the potential instead of the decay. But here's what the doom and gloom stories miss. East Liverpool is not a ghost town. Artists, retirees, and a few brave remote workers are starting to bring the old buildings back to life. Cafes are reopening, community spaces are making a comeback. The infrastructure is old, and the job market is a shell of what it was. That's the hard truth. But if you work remotely or have your own income, the opportunity is insane. It's a chance to live for a tiny fraction of the national cost and be part of a town's quiet comeback. A little further down the river, you'll find Wheeling, West Virginia. Wheeling's story is a bit different. It got hit by the same factory shutdowns, but it never completely emptied out. It kept its city bones, its incredible Victorian architecture, and a real sense of place. What it lost was the high cost of living. In 2026, you can find apartments here for between $400 and $700 a month. Think about that. For what you'd pay for a car in a big city, you can have a home. Wheeling gives you a peek at what city life could be. Walkable streets, beautiful parks, and a passionate community, all without the soul-crushing rent. Then you have towns like Brownsville, Pennsylvania. The collapse of the steel and river industries was so total that today, you can find homes selling for prices that sound completely made up. We're talking houses that cost less than a used car. The demand is so low that whole blocks are just sitting in limbo. This isn't just a market dip. It's the raw, unfiltered result of a town's entire economy disappearing. But even here, life goes on. Small, tight-knit communities hold on. For someone with a pension, a remote gig, or who just wants to live totally outside the system, Brownsville is an extreme, but fascinating, example of affordability. And it's not just the tiny towns. Bigger Midwest cities are feeling it too. Look at Toledo, Ohio. It's fighting a massive 14.2% rental vacancy rate, one of the highest in the region. This has caused a jaw-dropping 19% drop in median rent. Stagnant job growth and way too much housing have turned it into a renter's dream. For the local economy, it's a warning sign. For you, it's an open door. These places aren't for everyone. They require grit. But if you're sick of the rat race, they offer something that's getting harder and harder to find. A life where your money gives you freedom, not just survival. They are the quiet epicenters of the 2026 rent collapse. Section 2. The Sunbelt Correction. When the boom goes bust for the last decade, the Sunbelt was the place to be. Endless growth, warm weather, and huge opportunities. Cities like Austin, Phoenix, and Dallas were magnets for money, jobs, and people ditching the expensive coasts. Developers couldn't build fast enough, and rents shot to the moon on the promise that the party would never stop. Well, in 2026, the party is over. The exact things that fueled the Sunbelt's insane growth, nonstop construction, and speculative investing, have created the perfect storm for a huge and painful market correction. Let's start with the poster child of the boom and bust, Austin, Texas. For years, Austin was the golden boy. The next Silicon Valley, tech companies piled in, cranes were everywhere, and landlords were raising rents at a dizzying pace. Now in 2026, it's all come to a screeching halt. Austin is seeing one of the biggest rent drops of any major city in the country, with rents falling anywhere from 6.3% to a mind-blowing 20% from their peak in 2022. Two-bedroom apartments that used to average $1,725 are now going for way less. So, what went wrong? It's a classic case of supply and demand getting totally out of whack. Developers, drunk on cheap loans and hype, flooded the market with tens of thousands of new luxury apartments. They built for a future that never showed up. The tech hiring boom cooled off, and the city got too expensive for its own good. Now, all those shiny new buildings with rooftop pools are sitting half empty. Landlords are panicking, offering deals that were unthinkable 2 years ago. 1, 2, even THREE, months of free rent, no deposits, and other perks, just to get people in the door. For the first time in a long time, renters have all the power in the Texas capital. The story is almost identical in Phoenix, Arizona. This desert city was another star of the pandemic migration boom. But the building frenzy got way ahead of the actual demand. In 2026, Phoenix is flooded with an oversupply of luxury apartments and now leads the entire country in rental concessions. Some reports show that over half of all apartment listings are offering deals like free rent. Median rents have dropped by over 6% year over year, but Phoenix has another massive problem that's making things even worse. Water. The Colorado River crisis has cast a huge shadow over the area's future. The very idea of a booming desert city is now in question. This climate pressure, on top of the economic slowdown, has sent some renters packing, pushing vacancy rates up and rents down. It's a wake-up call that a market needs more than just job growth to survive. It needs to be sustainable. And this isn't just happening in Austin and Phoenix. All across the Sunbelt, from the suburbs of Atlanta to Las Vegas, we're seeing the same thing. Atlanta saw single-family rental prices drop by as much as 10% from their peak. Las Vegas is watching its vacancy rates climb, and rents fall by as much as 13% from their highest point. In Laredo, Texas, a town built on trade, a slowdown in shipping led to a shocking 22.3% crash in median rent. The Sunbelt rent collapse is a story of greed. It's what happens when hype gets disconnected from reality. But the good news for renters is that this chaos is creating affordability in places that were becoming impossible to live in. It's a painful lesson for landlords who bet on endless growth. But for the average person, The storm clouds over the Sunbelt have a very clear silver lining. We're exposing the cities where you can actually afford to live. But this map is changing fast. If you're getting value out of this, do me a quick favor and smash that like button. It tells YouTube you want more videos that show you what's really going on in the housing market. And if you haven't already, subscribe and turn on notifications. You don't want to miss out on where the next hidden gem is. Now, back to the collapse. Section 3. The Specialized City Shakeup, College Towns and Tourism Hubs. The 2026 rent collapse isn't just hitting old factory towns or overhyped Sunbelt cities. It's also hammering places whose entire economies are built on one thing. I'm talking about college towns and tourism hotspots. These places, once thought to be totally stable, are now facing their own housing market meltdowns, all thanks to huge shifts in education and travel. First, let's look at Champaign, Illinois. It's a classic Midwestern college town, built around a huge university. For decades, the rental market ran like clockwork, powered by students coming and going each year. Landlords could count on it, but things have changed. The explosion of online degrees and a drop in student enrollment have created a crisis. In Champaign, this has led to a mind-boggling 31% vacancy rate in student housing and a 26% plunge in rent. Landlords who built their entire business on renting 4-bedroom apartments to students are now scrambling. They're offering huge deals, trying to attract anyone they can, but the core problem won't go away. The students just aren't there in the same numbers. So, what does this mean if you're not a student? It means you have a crazy opportunity. You can now find huge, well-located apartments for a fraction of their old price. You're no longer fighting against thousands of students. For remote workers or local professionals, the student apocalypse has accidentally created a renter's paradise. And this isn't just happening in Champaign. It's a pattern in college towns across the country. Now, let's jump from the heartland to the high desert of Santa Fe, New Mexico. Santa Fe's economy isn't about students. It's about art, culture, and tourism. It sells a unique mix of history and natural beauty. For years, that brand was so strong it supported a super high cost of living. But the post-pandemic world has not been kind to Santa Fe. The number of visitors has fallen off a cliff. By some estimates, as much as 45%. This has crushed the local economy. The service industry, which employs a massive chunk of the population, has seen jobs shrink by as much as 17%. The result? A jaw-dropping 23% drop in median rent and a tripling of vacancy rates. The people who work in the galleries and restaurants are either struggling or leaving, and their old apartments are now sitting empty. One local joked that Santa Fe used to be full of artists, but now it's just landlords painting over the truth. The irony is brutal. The art scene made it through the pandemic, but it's struggling to survive the economic fallout. For someone thinking of moving there, it's a complicated picture. The cheap rent is a huge plus. The city is still magical, but the economic silence is impossible to ignore. Moving to Santa Fe in 2026 means getting a great deal on an apartment, but you might have a hard time finding a job unless you bring one with you. This pattern is repeating in other specialized economies. In upstate New York, areas that boomed with remote workers fleeing the city are now seeing it all go in reverse. As companies call people back to the office, those remote work havens have seen rents drop over 20%. The dream is fading, and it's leaving a ton of empty houses behind. These cities teach us a hard lesson. If your town only does one thing, you're at risk. But for renters who are flexible, the 2026 shakeup is creating amazing deals in some of the most unique corners of America. Section 4. The Big City Ripple Effect. Even giants are stumbling. You're probably thinking, okay, sure, rent is dropping in small towns, but what about the big leagues? What about New York or San Francisco? For years, those markets played by their own rules. The assumption was that demand was endless and prices could only go up. But 2026 is proving that even giants can stumble. While you won't find a $500 apartment in Manhattan, a massive correction is happening, giving renters more power than they've had in over a decade. Let's look at the beast itself. New York City. For the first time in what feels like forever, renters are actually gaining some power. Across Manhattan, Brooklyn, and Queens, rents have fallen between 12% and 15% from their recent peaks. Now, they're still insanely high, but this is a huge change in a city known for bidding wars and crazy broker fees. A flood of new construction is finally hitting the market, just as remote work has become permanent for many, and wages have completely failed to keep up with the rent hikes of the last few years. People have just had enough. Now, instead of lines around the block for an open house, landlords are secretly offering deals. They don't advertise it, but brokers are whispering about 1 or 2 months of free rent to get a deal signed. It's a subtle but critical shift. The era of landlords having absolute power is, at least for now, over. The situation is even more insane in San Francisco. The pandemic-era tech exodus never fully reversed. Remote work is the new normal, and the once bustling downtown is now an eerie ghost town of half-empty glass towers. Rents have plummeted by around 15% in just a year. Luxury apartments that used to be $4,000 a month are now struggling to get $3,000. And that's with freebies thrown in. The city is fighting serious social issues and a damaged reputation, which has scared even more people away. For renters, it means the most notoriously expensive city in America is, believe it or not, on sale. This isn't just happening in the 2 biggest cities. It's hitting the suburbs of other major hubs that saw prices explode. In the super expensive suburbs of Seattle, home to giants like Microsoft and Amazon, landlords are actually having to lower rent for people who renew their leases. The tech slowdown means living right next to the office isn't the top priority it once was. The big city correction is a story of gravity finally kicking in. These markets were overinflated by a mix of cheap money, massive job growth, and the belief that they were the only places that mattered. The party is over, and the hangover is real. They'll never be cheap like a small Midwest town, but the rent collapse of 2026 is cracking open a window of opportunity. For anyone who's been priced out, this is your moment. It might not last, but for now, the power has shifted. So, what did we just see? We saw that the idea of an endlessly, universally expensive America is a lie. While the national housing market is still a nightmare for millions, a powerful counter-story is unfolding in the cities the boom forgot, and in the ones where the boom went way too far. We've visited the river towns like East Liverpool and Wheeling, where industrial collapse has accidentally created insane affordability, offering a shot at a life without crushing debt. We've seen the spectacular crash in the Sun Belt, where cities like Austin and Phoenix are now drowning in empty luxury apartments, giving renters all the power. We've explored the struggling economies of Champaign and Santa Fe, where shifts in school and tourism have created unexpected bargains. And we've even seen the titans like New York and San Francisco start to wobble, as a dose of reality finally hits the country's most expensive zip codes. The theme is simple. The housing crisis isn't one single story. It's a collection of local stories, and pockets of incredible opportunity are popping up in the middle of the chaos. Now, these opportunities have trade-offs. Moving to a post-industrial town might mean dealing with a weak job market. Moving to a tourism hub means living in a fragile economy. But for a growing number of people, remote workers, retirees, and anyone just desperate for a different life, those trade-offs are worth it. They are choosing peace and financial freedom over the non-stop pressure of a major city. They're proving that the American dream of an affordable home isn't dead. It's just gone off-grid, hiding in plain sight in the towns that are quietly redefining what it means to live well in America. The map of affordable America is being redrawn as we speak. Which of these places shocked you the most? Would you actually move to one of them, or do you know of another hidden gem where rent is insanely cheap? Drop it in the comments below. Your story could help someone else find their next home. And if you want to stay ahead of these huge economic shifts, make sure you subscribe. We're always digging through the data to find the trends that matter and the places where you can build a better life. Thanks for watching.